Hi there, Reynaldo here from Enlightened Super Trader Education. Today I'm just going to demonstrate the importance of position sizing and why it's actually really important. So if you notice here, this is the dollar against the CAD based on the daily chart. Based on the position over here, they are all open as 103.03. So that's the price I got in at based on the average open. Now if I'm going to put my stop on the low of this bar, 102.54, 102.60, and since price is still pointing to the downside, now since I'm a supply and demand trader, even though that the trend is an uptrend, and as a trend follower, when price is in a level demand in an uptrend, then the probability of you winning is high. Like when I say the probability, it means really high. Now in terms of the risk is actually pretty small. However, now the risk will only going to be small if you're putting, say for example, you're putting the low within this bar. However, if you really are a trend follower type of a trader, then you won't be putting your stop based on that low. You'll be putting the stop based on the last low of the trend, right? Because the trend dictates that if it's an uptrend, a series of higher highs and higher lows. And how we know that? So it's just to demonstrate from here that high is higher compared to that high, that low is higher compared to that low. So a series of higher highs and higher lows. So technically speaking, there is no new low from this point in time. That is the last low, right? So here I actually bought some more. This dictates that there's that new low, but is it really going to be the new low since it is still pretty much pointing to the downside? But if we look at the bigger picture, like based on multiple time frame analysis, that maybe perhaps that won't be not yet the new low. You need a proper confirmation. So here's a bullish bar. This was based on the news of yesterday's Feds. So if I put my low part of here at 102.54 and the new low right there is 102.44, easy, then I would have been taking it. And what would happen? I will be kicking myself right now. So this is where it is important to know the amount of position size that you're going to put in, depending on knowing as well where you're going to put your stop. Okay, so part of my trading checklist, also part of my plan and preparation. So say for example you have a $10,000 account, you're not willing to lose more than 3%, then I'll give you an example right here. The average price 103.01. The stop loss will be at, what would be the low of this? 101.36 minus 13 pips, 101.23. So 101.23 will be the stop. 101.23. Boom. Then your position, the amount of position you're gonna put in is only 1 minute lot and 7 microlots, or in other words 17 microlots in total, no more no less. And if you want to have a 2-to-1 reward to risk ratio, then your long position or the reward in terms of your target point will be at 106.57. Okay, does it make sense? Because it's 2-to-1. Right, so in terms of the amount of position size you're going to put in is only 17 microlots. Okay, let me go back to the chart. Since there's a clear cut, clear breakout from the level of demand, bulls took over, that the probability that the price can head towards about 104.20 and so forth, it's highly probable that what happens if you now put your stop at this price? So let's take the low of that, 102.44 minus 24 pips, 102.24. Just put that right now, 102.24, 102.24, 102.24. 102.24. Stop is at 102.24. 24. Boom. Out of nowhere, it's telling you to put in 4 mini lots or 40 micro lots or four mini lots based on $10,000 capital. Maximum you can risk is 3%. So there's a big difference. The lower the time frame, or in terms of your stop, the lower position size. Once you increase your stop loss, then yes, you will have a bigger amount of position size. And also will decrease now in terms of your reward to risk ratio, and that's dictated 104.55, whilst before I was saying at 106. Okay, but since price is also going to the upside, if you choose to buy at 103.50 at the moment, then what happens? How many can we put in? 103.50. Then it's saying to put in 25 microlots or 1 or 2 millilots with 5 micros. So in other words, it's 25 micros rather than 4 millilots or 40 micros, telling for you to put in at 25 micros. Alright, so that's the demonstration for today on how it is important to know your position sizing based on your risk. Alright, this is Reynaldo speaking. Hope you enjoyed it. Take care until next time. Happy trading.